Today is the 22nd of July. This is the Silver Log. Before I get down to business with today's charts and analysis, I want to talk about the music that has been on a lot of the videos, which the plan is to make some of the movies very short and quick, couple minutes in length with some background music from Rick Clark's productions, and then some like this with audio in the background of my voice. And the reception or the feedback on the music has been quite amazing. July 20th, Drutter suddenly starts dancing, flashing lights, and drinks appear. Sorry, I'd love to read along, but the music is just too damn good. Dancing with three girls on the silver chart, and that is a very nice little comment. July 19th, Cosmic Gorilla 1. Nice tune. I feel like I'm on my holes in Spain. Sell GLD, sell stocks, sell SLV. Only hold the hard stuff. Charles 9888.8. Great tune, great work as usual. July 14th, Solo Jam. Great tunes, my friend. Guild F40, Ace soundtrack. I am also moving the hips this side. And July 13th, DG Moocher. Rick Clark has some cool music. Nice vid, thanks for the info. It would be a great sign to see metals break away from the overall market trend. And the music, which is from the RickVanMan Channel on YouTube. All of the links that I will be talking about will be in the more information box. He did not ask me to promote his channel. This was my idea because I am a huge fan for the work that he has done within this channel, not only with the music, but so many other different things. But we were talking about the music. On the bottom of his channel, you will see a banner to go to his web page for the music. This is the page in here. And what I really enjoy, other than the music itself, about his business strategy is he makes it very affordable to obtain the music. Where if you look for royalty-free music for your videos, a lot of times you could be spending $8, $9, $10, $12, $20 just for a single song, and 80, 90, 120 for a CD, where the full CD here is 10 Great Britain pounds, and that would be under $20 or 15 on US currency. So it is a very, very affordable, whether you want them for your YouTube videos, maybe a background noise, in whatever method, whether it is at a hair salon or whatever. Very, very good music. And I like his strategy on gaining many different forms of income using small methods here and there. He also wrote a book, The Secrets of Living the Life You Want. It is one of my favorite books of all time. Top 5, top 10. The price, $11.51 US, plus a little bit in shipping. Very, very affordable. The type of book that really gets to the point. It's only 69 pages, and it gets to the point where it says, "Warning: This book will change your life." Yeah, it's that good of a book, and he's done some videos on the issue. I don't know how many of you have seen it. There's been a playlist for the last 4 weeks on my page, Rick Van Man Mini Motivational Series. Go to my homepage. There's also a link in the more information box. Amazing, amazing video series. He also has Container Gardening for Food.com. He has a lot of gardening videos, and I know a lot of my subscribers are those trying to get off of the grid, and well, gardening is just one huge part of it. If you take a look at some of the videos that he has, you can see that you have like a gardening update June 29th, the most healthy breakfast. He went on a juice fast. A lot of amazing videos within the channel. And like myself, he is also a Google AdSense partner. And that's ways of earning small amounts of income. It doesn't really earn too much. And if you see my ads, please don't click on them because you want to help me out. However, if it's an advertisement you like or it's a place you want to be interested in seeing, then by all means, please click on it. But I'm not a big fan of people clicking on it just because they want to help someone out. And I'm also not a big fan of accidentally clicking on ads or when they force them upon you. Nonetheless, if you like what the ads state, please go ahead and take a look at what they happen to say. But excellent channel, and now on to the silver log. The first chart we're going to open with is the Silver Comex 200-day average movement chart. This chart is designed to show you the direction in which the 200-day moving average is moving towards. And the data is very simple. To calculate this data, you take the average price that we have today, subtract it by yesterday's average price, and you divide it by yesterday's average price. So today, the 200-day moving average on silver was 17.658. Yesterday, it was 17.652. Therefore, with this information that we have, we can get the pattern in which the 200-day moving average is moving, or how large it is moving. For when it's rising rapidly, then its target is going to be up here. When it's rising or it's declining rapidly, it's going to be down below here. And your flat moving average is right at this 0 line. And we are moving very close to the 200-day moving average being flattened out. And its moves on the first few years were not so significant. Its move up in '04 is when the volatility on silver started to get going. It obviously to the upside, a small leg lower to the downside, a huge move to the upside, and another move to the upside. That is big when you can hit one positive segment, go back to this flatline area and have yet another one, which was followed by a big move lower. We've now had a nice move higher. A lot of volatility in silver to the up and the downside, but since 2005, we've only had one major big hit to silver, which was the one in 2008. That was the big move from its 19-ish, 18 resistance that fell all the way down to below 9. So now what I'm noticing is a nice little pattern when I compare this move with this move. And I'm saying this because, first off, if we take a look at the pattern on this in comparison to this, it is showing us that we had a nice move up, and it's consolidated through time, didn't rise as fast, and then all of a sudden it had a nice move to the upside right after it in 2008, and that could very well just as easily happen here, where we consolidate here for a few months and then get going pretty nicely into 2011. That's one possibility, but when you look in depth towards this pattern, we'll start with this bottom, which was the biggest one it had at its time, with this bottom because it matches up very nicely. It has a run up towards this area just as this has a run up towards that area. Has a sharp sell-off, sharp sell-off. And then from these sharp sell-offs, you can see how it was able to maneuver a huge gain on both occasions. And it's something to look out for. But I look at this chart and I see overall bullish tendencies, because if I were to number this, big move higher, and then these moves here counteract, no real big down move, another big move higher, another big move higher, another big move higher, and a nice run lower, 4-1. And this is showing why it is very bullish, and we can see even more so with the 1,000-day moving average. And this chart is showing major bullish signs. We have not been in negative territory on the 1,000-day moving average since late 2003. And it made its big move up in 2006, like we've seen on the 200-day chart. And the big selling that it endured in 2008, that is, sorry, it didn't bring it into negative territory, but you've seen it had a nice size decline. And it has been able to hold this low, which is very bullish when you can establish a level like this and be able to at least bring in this higher low pattern. And I'm stating that because unlike a regular chart, maintaining a positive percentage is hard to keep on doing over the long term time frame, just as it is hard to maintain the negative percentages. And with the fundamentals on the dollar in comparison to silver, there can give good reason why we could have yet another bottom, whether it be at this level in towards the O2 area, maybe even test the negative area again, and from that level be able to surpass this high. This is 0.17 almost, so a bigger high that can make 0.19, 0.24, something in that area there. But when you look at a chart like this, to me, you see this as very bullish. And I haven't brought it up yet. I could probably do it very easily. But if you take a look at the Dow 1,000-day moving average over the last decade, I can tell you it's not going to look anywhere near as nice as this one will. This is the daily chart with silver, and we were talking about the moving averages. This orange line represents the 200-day moving average, and it was amazing support throughout its entire ride. And even though it falls below a 200-day moving average, it really doesn't mean too much because it's very common to have moves below the 200 like this and then recapturing them in a bull market. So it's more towards the direction of the 200-day moving average. On the sell-off, by the time you got here, it's like, whoa, you are well below the 200-day moving average now. And obviously it was showing signs of going very bearish. Its first test of the 200 was an area where it found resistance and support along, broke above it, and has found support on this occasion, and then again it has been finding support quite often at that level. So a break below there really wouldn't be that big of a surprise. I'm going to go over some of these other lines on the screen. The 1,000-day moving average I was talking about, that average would be this average in here. This is your 1,000-day moving average. It is rising very, very steadily right now. It's showing how bullish silver is within the market. And these lines in here, these greenish looking lines, this is Fibonacci, at least upside Fibonacci, betweening this bottom of 4 that we had down below here and this double top of 2004, 2005. The range is between 4 and 8. So the math works out. You take the difference, which is 4, and you multiply it by 1.618, which is the next Fibonacci level, and add it to the bottom of 4, which gets us this level. The breakout that it had in 2006 broke out big. Usually, a lot of times you find resistance at this area, maybe correct through time or through price. No, it kept going higher to the next level, which takes the same difference of 4, multiply it by 2.618, and the addition of 4 brings us to this number over 14, around 1430. And the next significant top was hit roughly at around this almost 22 level. So it found resistance at that area quite often, and we are trying to get back towards that level. It got up there a lot faster during this run that it had in '07 than it has now, and I was pointing that out with the daily 200-day moving average, how the moves were bigger. And thus, if it can get past this key level of resistance, then that next test should come into play. But because we've already been there once and we've corrected for a decent amount of time, that gives us extra reason for resistance to be a little bit lighter, maybe something we test for a month or two, and then a move above it. The next key level is roughly at around 32 and a half. The Fibonacci from this bottom of 9-ish or so and this previous top in here gives us Fibonacci levels at I think 14.99 and 12.05. So I just say 15 and 12 as significant levels. You also have these other moving averages from both the lows and the significant highs. There's this moving average and this since that point. And they are roughly just below 16 now. So any selling that breaks the 200-day moving average, that is an area of support before we even get to that significant 15 level, if it even does get there, because a breakout of this level does mean moves towards 24, 28, and you don't know how fast it could take to go from one level to another. For breaking 24 to about 31.5 is the same as this move here, which took place in a couple of months. So it could very easily break out any time at 22 and then go to 31 very, very quickly. As far as today's move in silver on SLV, it gained 41 cents or 2.37%, like the broad markets, having its gain at the start of the day, and no surprise, a very tight time consolidation for the rest of the day between 1770 and 1780. As far as the Dow Jones priced in silver today, we can see on this chart that this sold off, which meant because the Dow was rallying, silver rallied more at the start of the session, and because silver ranged through time, that enabled the Dow to gain from its lows as its rally kept on going throughout the day. Still, for the day, it lost almost 3 ounces of silver, or a 0.5% priced in silver. We're going to finish this off with freestockcharts.com. This site is excellent. Many people ask me for different sites. It's free. It has so many different features within these indicators. So you can do so much within this site. And for SLV, we have the 50 and the 200-day moving average on this screen, which have been very important levels. The 200-day moving average, which was a test in June. It was also a test earlier on in July, and again just recently. And the 50-day moving average was support on the middle of June, at the end of June, and it broke below it on the 1st of July with its big move lower. Since then, it has been in mainly of a range-bound market between the 200, which is rising, and the 50, which is declining. So this move is going to have to break one way or the other before it hits the death cross. That death cross is when the 50 breaks below the 200-day moving average. Whether that will end up happening, it very easily could potentially do so. I've mentioned those key levels of support. A break of this 200 is this trend line, and if you look at this trend line on the weekly chart, it connects these key lows in here. We can also see how the 50-week moving average is nice support. And moving on to the hourly time frame, it's in a very, very big range. And I've been stating that for a little while that on the intermediate term it has been bearish. That's because we were below this support level at 1736, which means we are still below this Fibonacci level of 1779. It was an area we expected to find resistance there, so it is now slightly bearish on the short-term time frame. A break of this trend line is what you'll need to do to get it into a neutral state. The neutral range would be from 1778 or 1780 or so upwards to about 1845-ish as the neutral range, and then anything above that is where you will start to become bullish again on the intermediate term time frame. The trend line that is going to be the most notable one is this one in here, which connects this top. It connects this close area and this top in here. Now this one, so it connects really 4 different points, but definitely 3. And the key support level roughly about 1715, and it can go down to even down to 1675, but even and upwards to 1735. But this has been the bottom of the current range in which silver has been trading in. As far as the 5-day moving average is concerned, it was declining and the gap got us above it. It's still a declining moving average. And if we take a look at less candles, so we can actually take a look at 5 different days, that's 1, 2, 3, 4, 5. So what's happening is we are now eliminating this day in here, which is 1795 with 1743. So pending anything that's, as long as we don't have a gap lower that's over 1.5%, this 5-day moving average is going to be rising. And it's going to be a big important level of support along with this key resistance level of roughly at around 1752. As far as the very short-term Fibonacci is concerned, what we'll do is we'll take a look at this on a 10-minute time frame and connect the most significant lows and highs on this chart, and we'll use these lows and these particular highs. And when we connect these together, we will come up with Fibonacci level upwards towards this key level of resistance here at 1754, which was the gap open on Friday. It was the area that it pierced on Wednesday. And we'll see if that area can coincide with the 5-day moving average, because if that happens, we say we come back down to 1753, then that would be a move back down to this area where we're talking about here. And then because you have your correction through price, you come back to this level of 1782. And at that point there, that's when you can expect to break it. And the 161 Fibonacci level I was talking about earlier gives us a price objective to about 1829 based on this high and this low. Thank you for watching this video. Make sure to check out the links in the more information box and have yourself a great day. Bye-bye.